Hey, good morning, everyone. This is Brian Hoops with Midwest Market Solutions. This is Market Insider TV and our opening commentaries. It is Friday, August the 29th. Good morning. Let's take a check of our overnight trade, and then we'll get into some market mover information. U.S. dollar index a little bit firmer here overnight. Usually that puts a little pressure against our grains, especially wheat. Natural gas just barely hanging on to gains overnight. It rallied into resistance last night and this morning, yesterday, failing at that resistance point. Crude oil down slightly. Stock market a little softer along with gold and silver. Corn too higher, and we'll talk about reasons why, what's going on with corn. Beans down 3 1/4, fractional losses in the products, and wheat's fractionally lower in addition. I will be doing some RFD TV this morning, 8:15 Central Time. Hope you have a chance to check that out. We'll be sending out the email link later this afternoon if you do not have the ability to watch RFD TV on a live basis. I do that almost every morning, Monday, Wednesday, Thursday, and Friday during the week. So let's talk more about markets in here. And when you go to our website, MidwestMarketSolutions.com, you can sign up for our text service, our Twitter feed, newsletters, daily videos, and all that information at our website. So check us out, kind of get a feel of who we have working in our offices. Maybe there's someone close to you that you'd like to work with on a hedging speculative basis as we put out hedging newsletters, spec newsletters, and all kinds of different just informational newsletters and audio video commentaries as well. So weather forecast, where we start, we talk about that over the next 7 days. A little slightly wetter conditions for the western corn and soybean belt. Now that will help soybean pod fill. One of the complaints we've heard from producers is it's been really dry during August, and this dryness is taking the top end of the yields off for both corn and soybeans. Now a lot of corn is denting, and so won't benefit from moisture, but I think certainly the soybeans will over the next 7 days, and that is putting a little pressure against soybeans overnight. Coming up this weekend, it is a Labor Day weekend, and markets are going to be closed Sunday night and all day Monday in observance of Labor Day. Grain markets will resume trade Monday evening at 7 p.m. Central Time, and livestock trade resumes Tuesday morning, 8:30 a.m. We will be putting out a text like we always do with opening calls on Monday night. So grain trade Monday night, but livestock won't be able to trade till Tuesday morning. It is first notice day against September grain futures today. There were 21 meal, 7 oil, and 328 hard red wheat, 181 spring wheat, and 3 soybeans delivered overnight against September futures. No corn, oats, or Chicago wheat deliveries. Overall, this is very light deliveries for the grains. Stats Canada was out yesterday morning. They placed their estimate of this Canadian all-wheat crop at 35.5 million tons, just slightly below estimates, and last year's crop, which was 35.9. Not much of a change, not much market reaction to that news either. So corn trading higher overnight and follow through buying after posting a bullish outside day higher yesterday. Strength is coming from a couple fronts. One, with the ideas that corn crop is getting a little bit smaller, and we've seen the largest yield estimate in August that we will see from the USDA. But new crop corn sales also very friendly here. We're the second highest total for this week in late August in history, only below the 21-22 marketing year. We were at 759 million bushels that year. We're 739 this year. So we're on pace to have near type record export program. And I don't see that really changing. I think we're in a driver's seat here in corn sales. Soybean sales are second lowest in 18 years. Corn's the second best, but if we would have any type of business from China, that soybean sales pace would change dramatically. Light cash cattle trade occurred yesterday in the north at 245 live, steady with the prior week. And in the volumes in the south, 241 to 242 live. That's $1 to $2 better compared to last week. Cattle futures were down yesterday, had a nice correction, a couple dollars in both live and feeders. A lot of this is due to ideas that the cutout values have peaked and will start trending lower as Labor Day buying is behind the market now. The cutout values, I think, have probably peaked. They were mixed by the closing bell yesterday, and probably going to see more pressure against them today. Have a great day, everyone, and good luck. Good trading. We hope to talk to you soon. This is Brian Hoops for Midwest Market Solutions.